Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
You begin by verifying eligibility and collecting paperwork. This saves time and prevents surprises. Pull your credit report and check for errors, because lenders focus on score and history. Next, set a realistic renovation budget with a 10-20% contingency so your loan request matches costs. Finally, assemble core docs: government ID, recent pay stubs, 2 years of W-2s or 1099, and your current mortgage statements. Once done, you'll be ready to compare loan types and start applications. You now pick the right product by weighing home equity versus HELOC, cash-out refinance, or a renovation loan. Each affects rates, payments, and closing costs. Obtain detailed contractor bids and a scope of work. Lenders require itemized costs and timelines, and permits impact disbursements. Then pre-qualify with 2 to 3 lenders to compare rates, APRA, fees, and rate lock terms. This sharpens your bargaining position. Make sure to ask about draw schedules and inspector requirements so your project financing flows when needed. You reach closing. Read the closing disclosure line by line and confirm loan amount, APRA, fees, and the start date of payments. Sign when comfortable. During construction, manage draw requests by submitting invoices and passing inspections so funds release on schedule. Keep copies and track any retainage. At completion, obtain final inspection and full lien releases before final disbursement. If problems arise, contact your lender immediately and document everything. A common fix is a temporary hold pending an updated invoice or remedial contractor proof.
Thanks for watching. Consider subscribing if I helped unscramble your problems.